Welcome to today's market report. European stock markets are seeing opening higher on Monday, the first trading day of 2021, with investors banking on the rollout of vaccines to help stimulate economic growth in a region hit hard by the COVID-19 virus. DAX futures traded 0.9% higher. CAC 40 futures in France climbed 0.8%. FTSE 100 rose 0.8%. Britain is set on Monday to become the first country to roll out the COVID-19 vaccine developed by AstraZeneca and Oxford University, a cheaper and more easily stored alternative to the vaccine developed by Pfizer and BioNTech, which is already in use. This will become another step forward in the global response to the pandemic, hopefully shortening the time before some form of herd immunity can be achieved and economies across the globe can reopen. At the same time, British Prime Minister Boris Johnson warned that he may have to impose tighter restrictions as COVID-19 cases soar in this country, while Germany is likely to extend its national restrictions beyond Jan the 10th to curb infection rates that are still running high. It is not only in Europe where coronavirus problems exist. Cases remain very high in the US, and in Japan, Prime Minister Yoshihide Suga confirmed the government was considering a state of emergency for Tokyo and 3 surrounding prefectures. Still, there was some good news on Monday as the Caixin Market Manufacturing Purchasing Managers Index for December came in at 53 for China, although below November's 54.9. This reading indicated the Chinese manufacturing sector is still expanding. The equivalent December manufacturing PMI data for the European countries are due later Monday and are expected to show growth here as well. In corporate news, Entain, the parent company of UK bookmakers Ladbrokes and Coral, is expected to open sharply higher after rebuffing a bid from MGM Resorts International over the weekend, saying it significantly undervalues the company. The corporate sector is otherwise largely quiet as the new year starts, but investors will be keeping a wary eye on Tuesday's runoff elections in Georgia for 2 Senate seats that will determine whether the Republican Party keeps control of this branch of the United States government. Oil prices climbed on expectations that a group of world's top producers will agree to continue to curb output next month at a meeting later in the day amid worries about demand growth as the COVID-19 pandemic rages. Crude futures traded 2.1% higher at $49.51 per barrel. Brent rose 2.2% to $52.92 per barrel. Gold futures rose 1.7% to $1,927.05 per ounce. On the FX front, GBP/USD begins the new year on a positive note and nearing 1.37, extending its gains after the UK is fully out of the EU. According to the Commerce Bank, the cable pair continues to rise and should shortly encounter the 137.12 February 2018 low and 138.36 the February 2016 low. Longer term, minor support below the 136.25 level can be spotted at the 135.40 early December high. Overall upside pressure should be maintained while the cross remains above its December low at 131.35. While the US dollar weakness helped the cable to the run up to a fresh high since May 2008 before a few hours, fresh concerns about the COVID-19 and Brexit joins the US dollar's corrective pullback to portray the latest weakness ahead of December's PMIs and the UK government's emergency meeting to weigh a third national lockdown. While a lack of clarity over the housing documents stopped British expats boarding for Spain, this is likely a starting to the mess which fears amid a rushed Brexit deal. It should be noted that services, the key to British GDP, may also have a bumpy road during the EU era and will create noises, especially when UK PM Boris Johnson aims for global Britain, as the Financial Times puts it. According to the Chinese zodiac calendar, we have entered the year of the ox. The new year has begun with the dollar on the back foot and a cautious market mood. While stocks are only marginally higher, the safe haven dollar extends its decline, with euro-dollar rising towards 123. Euro-sterling gained some positive traction on Monday and snapped 3 days of losing streak. Dollar-yen is dipping under 103, while commodity currencies are edging higher against the dollar. The dollar index was down 0.3% at 89.597, not far above a more than 2.5-year low of 89.515 made last week. This is today's market news. Thanks for listening. We'll see you next time.